Hello, everybody, and thank you very much for joining the webinar today. I'm really delighted to be joined by my colleagues from actually across North America. They're both staying up really late today in Canada and in the United States of America to present on our Business Health Check series today that's going to look at finance and cash flow, the basics. They're going to run through a series of different topics that are really all about how you as a business can navigate and manage through the COVID crisis, which is putting a lot of undue pressure on cash flow management and supply chain finance management. So just to give a very brief introduction to Alexander and Craig, because we want to actually spend more time on the discussion. Alexander Malaket and Craig, I'm going to put them both together, are long-time global experts in both of these topics. They've really literally worked in their whole entire career from both within the banking sector, then in consulting, working with government and industry on these issues from a policy perspective. So they bring such a huge amount of experience to this topic today. On top of that, Alexander works with the GTPA. He is a director of GTP Services, which is our for-profit arm of our business that works directly on our IP generation. And he is also the chair of our International and Technical Advisory Committee, which is a group of international trade experts from around the world that work with us in an advisory capacity to guide the work we do to help you. Craig, in his capacity with the GTPA, oversees all of our work that looks into trade finance and supply chain finance, from the development of standards, as well as new and emerging areas on trade regulation and compliance. So I'm really delighted that both of them are going to take over this session today. Both of them have had really long days. They've been up, I think one has been up, Craig has been up since 3 a.m. and Alexander is always up at odd hours. So he operates on different time zones. So in terms of how it works, we start off with their presentation. I tend to disappear so that I can monitor the questions. They'll run through the presentation and then we will open it up for facilitated questions at the end, which I will take from you in the chat box, and then I will field to both Alexander and Craig. So without further ado, it's over to you both, and thank you.
Wonderful. Thank you, Lisa, very much for that very kind introduction. Craig, delighted to be sharing the stage with you this evening for this webinar. It's going to be a good time. Ladies and gentlemen, thank you so much for joining us. We thought what we would do is try to make this a little bit conversational between Craig and I, so that hopefully we add a bit of an element of interest to the conversation and that you don't hear just one voice for minutes on end. We did have a bit of a debate, given the hours we've kept, to determine whether we should be using video or not. And we've taken the risk to go ahead, both of us, and have the videos on. Just one quick note, and that is, I can't recall whether Lisa mentioned this, but the webinar is being recorded and the link will be made available subsequent to the session. And I think before we start, it's appropriate to say a word of thanks to the University of Adelaide and NC State for their support as well and their collaboration with us. So our thanks to both of those world-class institutions. So Craig, shall we just go ahead and jump in? Maybe I'll start with a few words and we can get cracking.
Sure.
Okay, fabulous. So we thought what we would do, and this is, so as Lisa mentioned, I mean, the COVID crisis, which we're all living together, has exacerbated what is a fundamental issue for small, medium-sized enterprises and micro enterprises, which is the whole question of finance and cash flow. It's always a problem for small businesses, and Craig and I are currently both small businesses. I am the smallest of small businesses. My consultancy is a one-person shop that has done business in, I don't know, 40 or 50 countries, something like that, over the last 20 years. So whatever pain you're all feeling as you're joining us on this webinar, believe me, I've felt it very directly, and I know what it is. And so some of these topics very much are not on the theoretical realm, but very much in the practical space. So very quickly, just to cover that off a bit more formally, the question we start with here is to find out how critical is cash flow actually in practical terms. And one expression that you hear very frequently when you're thinking about small businesses and you're thinking about the success of small businesses is this idea of cash being king. So it's all well and good to generate revenue. It's all well and good to be profitable. But the one fundamental problem that small businesses, and I would argue even some medium-sized businesses face, and certainly the micro enterprises, is if there isn't enough cash for you to be able to survive until the next invoice comes in, or until the next deal or transaction or sale comes in, it's an existential threat. So cash really is king. Small businesses all around the world, and it doesn't matter whether you're in a developing or emerging market or any OECD economy, small businesses around the world live or die by cash. And so I think that's a fundamental premise of our discussion today. And we would then suggest that the cash flow statement, which is part of the financials, has a lot to do with reflecting the health of a business, perhaps more critical in that respect than that statement gets credit for, in terms of looking at the priority of the various components of a set of financial statements. The accountants and the investment analysts who look at larger businesses, or the accountants that look at your businesses, may look at it with a little bit of a different priority. They may be more interested in income statements and other components of the financial reporting. We would like to just really highlight for you that cash is fundamentally critical. And as we said a moment ago, you'll see in the red box at the bottom of the screen here, the vast majority of SMEs anywhere in the world live or die by cash. We can talk about—
Hey, Alex, can I just suggest maybe you go to full screen?
Yes, let's see how we do that.
Turn off enable.
You know what? That's a very good question.
I think you can do it by going to slideshow start.
Slideshow.
Top, very top.
There we go. Better?
Need to take off enable editing. You need to click that.
I don't even see that on my screen anymore. Okay.
Well, there you go. And then you can go to slideshow up on the top of it.
How is that now?
That's perfect.
Okay,
That's
perfect. Thanks for that. Okay, so we were saying that, let me go back here, come back to the statement of companies, small businesses living or dying by cash. And then just to talk for a moment about, and then we'll get into some of the more practical components of this, just some fundamentals. I mean, how does cash come into a company and how does cash exit a company? And it's typically the inflows are through operating activities, such as receiving payments and settling invoices, or via some kind of a financing strategy, whether it's selling stock or equity, or whether it's some kind of a loan. And of course, on the small and micro size of the scale, we're less likely to be talking about the sale of equity or stock, and much more likely to be talking about various types of borrowing that may happen through the banking sector or through non-bank providers. The outflows of cash, of course, again, can relate to an operating activity, may involve the payment to vendors. They may involve interest payments on a debt, as we talked about a moment ago. If there's a borrowing behavior within a small business, of course, there's an interest outflow there as well. Taxes are always a very significant element of the cost component of running a business. And then finally, you might want to invest in either purchasing components for the production of goods or capital goods or other inputs into the kind of production and sales process. So, to the extent that a business is a going concern and continues to run business, this whole idea of cash flow, whether it's the inflows or the outflows, you look at that from the perspective of how healthy is a business. And so if you look at the graphic on the right-hand side of the screen now, there are components here that include ways to increase revenue, whether it's by volumes of sales, whether it's by changing pricing. You look at operating margin, so cost of goods sold, and other components, including things like marketing budgets, managing payroll, overhead, all of that. And then finally, the third component is the capital efficiency piece. So return on assets, any sort of IP or proprietary technology, and any sort of inventory and the management of inventory from an efficiency perspective. So all of these components feed into the cash flow discussion, and all of them impact directly the health of a business in terms of its working capital and its access to cash. So we've talked theory now, and that's kind of the accounting sort of view of things. But even in the pre-COVID reality, most businesses are living almost invoice to invoice. There's very little cash flow there's very little excess cash flow, let me put it that way. And so, one of the questions we could ask ourselves is, in practical terms, and we're talking about this from a financial health check perspective, what are some things that small business owners and managers could be thinking about and could be doing to ensure the viability of their enterprise? One of the things that we're looking at in policy circles right now and macroeconomic circles is not only the impact of COVID on small businesses, but how does that add up across the economy? And what happens when small businesses have been shuttered and in isolation for 3 or 4 months or longer? What implication will that have to their ability to survive beyond the crisis and to the stage where economies start to open up again, even on a staged basis, which is what many of us are going through. So what are some of the things that an MSME founder or a manager of a small business can do that has some realistic sort of elements to it? So I'll just run through a couple of positioning statements, and I'm sorry I keep having to shift the video portion of this across the screen here. And Craig, if you please just jump in. I think we said we would make this as conversational as we can. So if you find I'm heading off track or missing something, please just go ahead and jump in here. So I wanted to just suggest, based on our conversation ahead of this session with Craig and with Lisa, that there are a couple of things that we can think about that are maybe fundamental to the cash question. So, what is the value proposition and market positioning of your business? And how could that potentially impact your options for accessing cash and accessing working capital loans and other ways of keeping yourself liquid? Is your market positioning very clear and differentiated? Do you have unique, differentiated intellectual property that makes you different from your competitors, either across the street or across the globe? Are you what's called a strategic supplier in a global value chain or a supply chain? Does that make you important enough in that supply chain, or critical enough, mission critical enough to that supply chain and that large buyer, that you can potentially leverage that, and I use that term advisedly in a very gentle way, to help yourself have access to liquidity and cash in a cost-effective and a timely manner? And for some companies, the answer is yes. For some, if you're in a bit more of a commoditized business, maybe that component isn't as critical. But we know from past lessons and past crises that there have been situations where, and I think, Craig, you're planning to elaborate on this a bit later, so I won't get into it, but where 1 or 2 strategic suppliers have been unable to produce, have been unable to access the supply chain, and suddenly the entire supply chain process grinds to a halt. And if you're fortunate enough to be in that kind of a position, then the question about your value proposition and what you can do with it starts to become really important. What's your level of financial literacy? How competent are you in speaking banker? How comfortable are you with speaking about financial concepts? How well can you present a so-called bankable proposal? Are you able to speak to a financier? And we say banker, but we could be talking about a non-bank provider as well. Are you able to clearly explain your needs? Are you able to clearly give appropriate levels of comfort to a potential lender to show that you've identified the risks, that you've adequately managed and mitigated them, so that people feel comfortable to lend you the amount of money that you need to remain viable? Do you have any commercial leverage? And that's a kind of a tough question to ask of a small business. But the example of the IP we talked about a minute ago does translate to a certain type of leverage. Is it possible that you have leveraged to your own downstream suppliers where you can delay payment to them and therefore increase or improve your working capital or cash position a little bit without doing it so unreasonably and adversely that you put at risk your supplier relationships? Clearly we've had some side discussions, Craig and I, about being small businesses